Good evening, friends. So, first of all, welcome to our channel, and also today I'm going to show you the fundamental analysis of one of the micro cap company which has given good return in last few years. The company name is Shri Venkatesh Refineries Limited, and you can see on the chart how the price is moving from rupees 20 or 25 rupees to now it is 112 rupees. You can say almost 300% return in the last 5 years. And if you see that this company is from agriculture sector, and the main activity is the solvent extraction activity, and market cap right now just 248 crore. It is from the small cap, and enterprise values is 382 crore. Book value per share is 30.3, and you can say the current price is almost 118, which is almost 3 times from their book value. And price to earning ratio of this stock is 17.32. And whenever you see any stock which is having the price to earning ratios around 17.32, it is, you can say that the company is very undervalued and maybe in good situation for buy. PEG ratio is very important for understanding the share market growth. For example, right now the current price showing that is PEG ratio saying 0.19. It means that the company price may go high. Dividend is 0.89. So you can say that the company has given almost 400% return in last 2 years. Okay, and just see more information about the company here. The company is engaged in the business of refineries and the prevention of edible oils, maybe soybean oil and cotton seed oil. The company processes the involved purchase of the raw material and also refinery packaging and selling of edible oils. And nowadays the edible oil demand are very high, and usually you can see these kind of companies are very in coming days the consumption of these product will be very high. Now let's see talk about the delivery of this stock, and deliveries talk about like how many traders buy and hold this stock. So it is showing that almost 80% deliveries are going on this stock. You can say the company is also paying some kind of dividend, along with it is also showing 1:1 bonus. And now let's see about the some more information here. If you talk about the technical information, the company has given already 410, which we have talked. And if you talk about the some technical information like relative index, commodity index, money flow, these all are showing right now neutral, but always check with your technical advisor. Now let's talk about the overview. The company from agriculture, solvent extraction, and if you see here, you can say that the company name is company is having one brand called Rich Soya, and this brand Rich brand, Rich Sun brand is they are producing as a refined and all refined product, edible oil product they are making and selling to the market, Indian market as well as overseas market. Now let's see more information about. I think we have talked some more information like this book value and price to book value. Dividend is 0.89. Company is also paying some dividend. And if you talk about the quarterly result, you will be very happy that the company sales are increasing from 145 crore to 152 crore in last few years. And if you say that June 2022, the company has also sold 176 crore, sell the total revenue 176 crore. EBITDA, if you talk about that is the one problem. The company is having very low EBITDA growth right now, and it is showing that 10 crore to 8 crore to 9 crore to again 7 crore. Companies have also having very low EBIT margin. And if you talk about the interest, the company interest is also growing from 1.3 crore to 2.59 crore. This is also one of the concern, because companies debt are increasing along with some sales are also not that much stagnant. So these things you have to check before taking any decision on buying or selling. Now if you talk about the tax is also company paying, but apart from that the net profit is also companies is not that much consistent. Earlier the 5.9 crore it went to now 6 crore, but after that again it touched to 3 crore. So there are some fluctuation happening. If you talk about the annual return, you don't have too much data for annual return for this stock because companies had introduced in 2020. So now you can see the companies is 629 crore overall revenue showing, which is excellent growth in the last few years. EBITDA is also showing 27 crore. Company interest has increased from 5 crore to 7 crore. Along with that, companies are also having net profit of 14.34 crore. If you talk about the ratio, company ratio is also showing very excellent right now. It is saying that the company return on equity is 31.24, a company return on capital number 22.45, and company's return on asset is 9.27. These three are very excellent. If you talk about the margin, companies, I told you margin is very low for this company. It is almost 4.48%, and also earning per share of this stock is 6.48 rupees. Book value is also growing from you can say 16 rupees to now 47 rupees, but you can say overall inventory turnover ratios, these things are improving right now. And if you talk about the working days capital is also showing 463 crore, which has increased. It should reduce, but it is increasing. So these things you have to always check before taking a decision. Now let's talk about the balance sheet here. And balance sheet, you can see that the company equity capital has been increased. In March 2020, the equity capital was 6 crore. They improved to now 8 crore to now 11 crore, but they are still continuing with the 11 crore equity capital. Reserves are growing from 18 crore to 62 crore. That is also exponential growth, but we can't say that the company is very recently onboarded in the equity market, so we need to review that how it is performing in the upcoming future. Current, if you talk about non-current liabilities, the company is having 32 crore non-current liabilities, and also current liabilities almost 133 crore. That is the concern here. Company short-term liabilities are increasing, short-term borrowing also increased 103 crore. So these part you have to always check with the advisor. Now if you talk about the non-current asset, also increased from 23 crore to 25 crore, and if you talk about the current asset, is also increased from 44 crore to 214 crore. So that thing you have to always check before taking any decision. And if you just expand and check how many things under the current asset, so inventory is 180 crore, which is the highest ever for this company. And market, they are going to receive 90 crore from the 19 crore from the market, and also cash and bank, they are having 6 crore, which is also almost highest ever they are having in the cash and bank. Net sales was earlier 227 crore in 2019, but after that in March 2023 the company net sales increased 629 crore, and along with that the company is also having some PBIT, profit before interest, depreciation and tax, is showing 5 crore to now 28 crore, but after that the PAT, profit after tax, company increased from 1 crore to 14 crore in last 3 years. So this is the thing. Company is having some cash crunch, but right now it is also having 1 crore cash flow right now, showing positive after balancing and adjusting. And if you talk about the pattern of the promoter holding, promoters holding intact 73.53, and public holding is 26.47 intact. They are not reducing a single piece of share. Maybe because of the growth prospect and the consumption of edible oil, promoter and publics are holding this particular stock very tightly. So these are the promoter name. You can read from this website app. And now if you go here in the scan, and you can check in the whatever scan they are having high return on equity. So these things, some positive thing for this stock. Always check with the advisor before taking any position in this stock. Thank you for watching this video. Please subscribe our channel. Have a nice day. Bye bye.